Is this mic on? There we go. I feel like we just got some team bonding in. We just broke the ice real quick there. Thank you so much, Robert. Great to have you here. Moving right along, really excited to bring up this next panel. We're going to talk about fundraising. Everybody needs some money, right? Maybe not the best time for money, but we're going to bring up these experts, if you will, and they'll tell you how you can raise some money, what to avoid, and all that good stuff. So without further ado, panelists, as I announce you can make your way to your seats. Our moderator is Mercedes Elias, co-CEO of Amerivet Securities. She is currently the first and only woman veteran to serve as CEO of a service-disabled, veteran-owned broker-dealer on Wall Street. She is of Mexican-American descent and grew up in San Antonio, Texas. Her father served in the Air Force, and Mercedes attended Officer Candidate School and was commissioned as an officer in the United States Marine Corps, serving a combat tour in Afghanistan from 2011 to 2012 in support of Operation Enduring Freedom. In 2020, she was appointed by the mayor of New York City to sit on the city's Veterans Advisory Board. She attended Columbia University and is currently enrolled in the Wharton Executive MBA program. I don't know how she does it all, but she does. Next up, we've got Jacqueline Blackburn, who's joining us from Decisive Point. She is leading the defense and security portfolio at Decisive Point. She graduated from the United States Naval Academy and led 4 deployed teams in the Naval Explosive Ordnance Disposal Community. She was responsible for training and building small teams for no-fail missions in the Middle East and Africa. Prior to Decisive Point, she was an investor at Scout Ventures and spent several years at JP Morgan working closely with founders and building out their early-stage technology and disruptive commerce practice. Thanks for joining us, Jacqueline. Next up, we've got Robert Garland. He is a founder and CEO of Fund the First. When Robert's close friend was facing mounting medical expenses relating to his daughter's rare illness, he set out to help and research the best ways to raise money. It was then that he realized his brothers and sisters in blue were skeptical of existing crowdfunding sites, leading him to make the decision to build a better platform that all could trust. Before founding fundthefirst.com, Robert was a decorated detective with NYPD. During his 14 years in law enforcement, he worked with various roles, including joint interagency operations with the Department of Homeland Security and the DEA. He is a philanthropist, entrepreneur, and former Division I baseball player. Last but certainly not least, Brandon Shelton, managing partner of TFX Capital, is joining us today. He founded TFX Capital in 2015 with a fundamental belief that the best entrepreneurs come from those who have served. As the managing partner, he leads the firm's service-driven investment strategies with a focus on pre-Series A and Series A B2B technology companies. In addition to serving in the U.S. Army as a Ranger Qualified Infantry and Intelligence Officer, Brandon's previous roles include senior management positions at financial services firms and consultancies both on and off Wall Street. Brandon has a BS in Business Administration from University of Richmond and an MBA from Duke University. He serves as an advisory board member for Veterans Bridge Home and previously served on the boards of the Street Shares Foundation, National Association of Veteran Serving Organizations, and on the SBA's Veteran Business Affairs Advisory Council. So I'm not the fundraising expert. These people are. I'm going to leave it to them.
Thanks, Alexa. And thanks, everybody, for coming out. Obviously, as entrepreneurs, the biggest question is, how do I get money to make money? So on the panel today, I have a couple of esteemed individuals who either found success in their own funding strategy or is a key decision maker identifying companies to invest in. So we'll start out with Jacqueline. Given the recent Silicon Valley bank collapse, what are some immediate and long-term strategies founders can implement to ensure financial stability and sustainability during the economic volatility we're currently experiencing and the potential downturns they could face after that volatility?
Yeah, absolutely. Can you hear me? Okay, perfect. Awesome. Yeah. So I'd say in terms of immediate, reactions that you can have towards the SPV or SVB situation is really streamlining costs. So making sure you're optimizing your cash flows, making sure you're looking at your accounts receivables, and trying to align your payment cycles for consistency. So that would be the first thing. The second thing is to focus on your core business model and what gets you money today. So think about that strategy in terms of being really diligent on your core business model, and then making sure you're keeping your investors informed of your financial situation. No investor likes to hear from their team that they have 1 month of runway left. And then I think long term, term, looking at how do you diversify your revenue streams. So don't just rely on, one area of growth. And then making sure you're streamlining your business processes through tech enablement. So thinking about how you're automating routine tasks, how you're implementing CRM, and then having like data analytics for those insights that you're capturing. And then, making sure you're building a good culture and building a good team. I know previous speakers have talked a lot about that, but that's very important, particularly in the early stage. And I think when you build a really dynamic team, that team is going to be able to get through the good times and the bad times. And then long term, building out your contingency plans for both the economic good and bad.
Thanks. That's so helpful and beneficial. But, these are challenging and uncertain times. Participation in the labor force is historically low. Blame's being placed on government programs, supply chain disruptions, millennials, confusing central bank policies, government spending money that they just don't have. So nobody knows what's coming next. I'll turn it over to Brandon to ask, what are the biggest challenges that small businesses and startups are facing right now when trying to raise any type of capital?
Yeah, great. Thanks for the question. First, we kind of glanced over recognizing Alexa and her team. They operate on a shoestring budget. I was here in 2019 when we were over there. There are a lot of these little mom and pop organizations. That's what I categorize you as. Everybody wants to come out for the pet event, right? All the brands, everything else. But there are real people in here that have real networks and real access. I just give you a lot of credit, and you should take the credit, because the military-connected ecosystem in the United States is the most powerful peer-driven network, okay? And we're all members of that. It's our job to serve it. She is definitely serving it. You're definitely serving it. So just a real quick round of applause for Alexa. Thank you. And so this is the first panel I think I've been on recently where I'm the oldest one. This is new for me because in 2004, my first Wall Street job out of active duty was in this building with then Barclays Capital. Well, I think on this floor, which has now been now an event space, which is very interesting. And then ironically, I'm back in New York based on your question. I was actually at Bear Stearns in 2008, which is why I bring up the age question. 2 blocks up. I was a fixed income trader the day we fell apart. We blew apart in a week. I'm also a Silicon Valley Bank customer, so I think I'm the common thread in all of this. And $42 billion walked out the door between 6 and 10 hours. And we never knew it. That's the craziest thing. And I think when the jury and all the investigations that will happen, I think sadly you're going to see a bunch of venture capitalists created the panic, sadly. And I think perhaps 1 or 2 members from our own community. So just very interesting times. I just use it as a benchmark. Are we the same as 2008 or not? I have no idea, guys. I'm operating. I'm a founder myself. We're trying to make it through today to get to tomorrow, to get to the next day, just like everybody else. But to go back to your question, listen, I think if you're a small business, so let's say you are, and I know we have some here, you make, various different services, or a software company like Omar's company, you're going to face challenges fundraising. So I think the stat that was given around small business owners, I found it interesting that the U.S. military pulls from middle and lower income backgrounds, right? A lot of the folks who are in banking, venture capital come from middle and upper income. So the civil military divide, due to no fault of anyone's, is arguably wider. This is why we started our firm in 2015 to try to help bridge that gap. And now there's a number of near-peer organizations. There's fundamentally more doors for a veteran or even a military spouse to have hopefully a more friendly conversation. But at the end of the day, it's capital. We're investing not because you're a veteran. I don't actually care that you served. Right? So when you hit me with the West Point this and the pilot that and that stuff goes right over our head. It's more of that you serve. So we're members of this, and Mike and I talked about this on our podcast, we're members of a very small tribe, right? So just know that. So when you're going to a small banker, like a credit union or a regional bank or something like that, I would be looking for the network that the speaker gave. Is there a friendly door? But when you get knee to knee with that person in today's market, risk. And risk is not jumping out of an airplane, diving or whatever we did in the military, or driving a truck. Risk in capital markets is very different. Am I going to lose my money, right? And so just have that in the back of your mind if you get hit with, the markets are terrible for lending, so maybe you've qualified for the 7A program or some of these types of other lending programs. Just understand what that person's dealing with on the other side of the table. I would say on the venture side, our portfolio companies, some of them have been trying to raise really for the last couple months. And I would say the current slowdown in venture to software companies, which is my lane, really started last March. Last March is where a lot of the markets started becoming wobbly. By May, if you go look at public equity markets, it tanked, if you guys recall, right? There's a panic, like, oh, all these software companies, most of the companies that had IPO'd in 21 lost and are still losing money. You could argue that they rushed for the gates and IPO too early. Well, all that system, billions of dollars, swirls around and can impact an early stage founder like an Omar, right? It can impact a small banker, right? And so the current banking crisis of the last 2 weeks, it will affect every lender out there if they're lending to a bank. Lending to your business. So they'll ask you questions like, do you have revenue? No, I need money to get revenue. Venture capitalist, do you have revenue? No, I need the capital to get revenue, right? So you're in this constant circular debate. All I would say about the current market conditions is just understand it's different than it was 12 months ago, right? And so what can you do as a founder? I think you have to just manage your mental energy. I hate capital raising myself. I'm in the middle of capital raising myself. It is the least fun thing to do. I don't think I'm very good at it, but just understand it's the best thing you can do. Work the problem, take on all the advice, take on best practices, attend events like this, but manage your own personal mental energy just to give yourself the best possible chance to get to the other side. So just 2 points there on like if you're getting small business loans, or I think for my lane would be equity capital. I think you guys do equity capital, and is that how you guys do it too? Oh, okay, no, different. Okay. Donations, excuse me. But hopefully it's helpful.
Yeah, and I think the key point that you're making is timing. Timing is everything, right? Whether it's the markets, whether it's where you're at. And so, Robert, I want to ask you, because you successfully raised $550,000 via friends and family in May 2020, a few months into the pandemic, using your own crowdfunding platform. As a former baseball player and NYPD detective, tell us how you accomplished that despite having no formal business background, and tips you have for founders who are fundraising for the first time.
Sure, thank you. So I'm not part of the military tribe. I was an NYPD detective. I worked narcotics actually right here on these streets. 405 in Vanderbilt. I was buying crack cocaine from people right here.
Let's talk about that.
But yeah, if anyone needs a nice hookup, I know the guy in the corner. I'll let you. So I'm covered in tattoos. I have earrings. I got a mohawk. I lived that life for a long time. And when I was working narcotics, you guys know, we have camaraderie, right? You have all your friends that you're working with, and you get really close with people. One of my supervisors, Jason Stocker, his daughter was born with a very, very rare illness. And it was hard for me to see this when my daughter was born 2 days apart. His daughter was not hitting any milestones. And I said to him, we got to do something for your daughter. We got to get you on GoFundMe, one of these fundraising platforms. Let's do something. And he looks at me and he says, no, I'm not doing that. And I said, why? And how many of you have used GoFundMe before? I'm sure everyone has donated to it, right? On some campaign, everyone's been there. He said, take a look at it. There's no verification. There's no vetting. There's fees. There's a lot of troubling things that go on in there. And I did. At the time, I was running a large-scale wire case. I had a lot of access to different databases. So I did a data pull. I'm sure you guys have used old computers at some time when you're not supposed to, and I did. So I did a data pull, and I was looking at different things, and I recognized in the industry that in the crowdfunding industry, especially with donations, there were duplicate fundraisers. There were fraudulent fundraisers, and you see it time and time again. So I looked at Jason, I said, you know what, I want to do a nonprofit for your daughter. And he said, no, you're onto something bigger. And I said, okay, let's see. I don't have a business background. I'm a detective. I don't know what to do here. Luckily, one of my closest partners and closest friends that I grew up with playing baseball, he happened to have a business background. So I said, hey, Mike, I have an idea. Let's build a crowdfunding platform in the donation-based industry. And he goes, how are we going to do that? I go, you got the business background. Let's figure it out. I have no idea. So we put pen to paper, like we all do, with an idea, and we try to figure it out. And sure enough, we said, what do we need to help the most? And it's first responders. It's military, medical providers, nurses, teachers. They didn't have a centralized means of raising money when you needed to. How many of us go through illnesses, surgeries? You see death every day. It's horrible, horrible. I see it in the cop industry, in the police industry. A cop gets killed every week now. Every other day. It's horrible. In the military, the suicides left and right, everywhere. And there's always people looking to give, but they want to give to a trustworthy source. And that's why we created fundthefirst.com. So during the pandemic, we were building connections on LinkedIn. And if you go to a friends and family round, you have to have those connections. You can't just go up to somebody and say, hey, I'm doing a round right now, and you know this best. I can't just go, I don't know you from Adam. Hey, I'm going to do a round. Do you want to raise capital? Do you want to invest in my company? How many things does that violate? You know,
It's a blast.
yeah. So you can't do that. We had to build these networks. My brother at the time was playing with the Twins down in Florida at spring training. He got released due to the pandemic. Horrible. Made up the AA, whatever. That's a whole different story. But we went down to Florida, and one of our networks, our original board of advisors that joined our team, he said, listen, I have a huge network. Pitch to them. Pitch your idea. Let's see if we could raise some funds, because this is something that needs to take off. And I did. And I sat in front of a group about this size, and they all looked at me like I had 10 heads, because I did not know how to speak at the time. I was a detective. All I knew was detective jargon. I had no idea how to speak. So one of my founders said to me, he said, hey, Bobby, and I go by Bobby. He said, Bobby, get on stage and let them know who you really are. And I took off my jacket, and I'm covered in tattoos. And I said, this is who you're going to get. You're going to get this guy on TV all over the place if you guys invest, and this is who you're going to get. And they loved it right out the bat. And I brought the passion to what we wanted to do to raise capital and why we wanted to raise capital. And I'm sure all of you have an idea of a business you want to create, but it's the passion. It's not learning all the insides and outs of it. It's the passion that goes into that business that you bring to those investors. And when they hear that, they want to give the money. So luckily, we did that right during the pandemic. We raised $550,000, and we got this company off the bat. And now we're going 2 years in. We're looking at going to a Series A, hopefully in the fall. So we're moving along nicely, and it's been an experience. So I'd love to talk to you guys more about it, but I don't want to waste any more time.
Yeah, that's awesome. And Bobby, you touched a little bit on authenticity, especially as a founder, and especially as you're meeting investors to do that fundraising. So, Jacqueline, your company, Decisive Point, has deep expertise in startups and venture capital. What are some do's and don'ts for businesses and startups leveraging social media and digital platforms to engage with investors?
Yeah, absolutely. So I think there's a couple do's, a couple don'ts. So do's, always be professional. Make sure that when you are posting content about the product or service you're offering, that it's digestible to the common person, right? The non-technical person. I think visuals are really great ways to kind of capture that. I think if there's a technology that you're working on that you can explain to your mom or your younger sister or sibling, and they understand it, you're probably in a good spot. And then just be consistent with the messaging and make sure you're building trust with the people that are reading and absorbing your content. In terms of don'ts, don't set unrealistic expectations for yourself. Make sure that you have realistic expectations in terms of milestones. Make sure don't lie. Obviously, I feel like that should be something that everyone knows not to do. And don't overpromise and underdeliver.
Yeah, talking about technologies, that's really Brandon's expertise. Because Task Force X Capital, you focus on pre-Series A and Series A B2B technology companies. But as we think about record low rates over the last decade, there was more of a focus on company growth and user acquisition and less focus on, let's say, cash flow and profitability initially. How has that changed for you and TFX Capital over just the last year and a half?
Yeah, I mean, I think for us, nothing's changed, to be honest with you. We've always been small in terms of available capital. Because we pitch those same investors who invested in us on the veteran card. We're always trying to teach why would veterans that we look for make good investors and blah, blah, blah. So because of that, we've had limited capital. And so we've picked our shots really, really deliberately. So our investment tempo actually didn't go up or down based on the pandemic. It actually just stayed the same. The second reason why it hasn't had too much impact for us is that we play in the early stages. So where there's terrible processes, lots of passion, super stubborn founders, there's shit everywhere, so to speak. They have a product that we won't go below product. Like if you just have a PowerPoint, that's not for us. But they've been toiling away maybe 12 months. If you look at some of the stats, a lot of venture-backed or angel-backed software startups fail between 12 and 20 months. So it's an interesting window because you get past, we joke, who are founders in the room? Okay. How many of you, raise your hand again in a second, how many of you guys, when you had your logo, immediately put it on LinkedIn and updated your profile? Okay, that's all of you. Don't BS me. And then what were the messages back from people you went to school with or serve with? You're the man, you're the woman, go get them. And you felt this euphoria and everything else. So it's that first 6 months, I had the same thing. You get to that second 6 months, and now you're pulling savings. If you have a spouse, they're like, what? I don't understand, and it's not working, and all I'm serious. That's a real thing about that year mark. We want to be right there at that year mark. Tell me the passion. I would agree 100%. What your purpose? Why did you guys start the thing? Quit your job? Whatever. Why now? And then tell me more. So that's unchanged. Founders are starting businesses every day. They could care less about a recession. They don't. And 3 of the sectors we invest in, cyber, defense, and healthcare, also do not care about recessions. We have the worst healthcare system in the world by many measurements. They have an unending amount of innovation demand. Cybersecurity, I don't need to repeat that here in this room. It is a self-licking ice cream cone. Right? Every time a company has a patch, adversary adjusts, right? And then defense. Obviously, we're all here, and we see how giant these budgets are. And the latest one's, what, $830 billion or something like that? I mean, they're stupid numbers, right? And so I'm saying, like, the markets are interesting, but at the stage where we play, we haven't seen too much adaptation. But I will make one comment. Up the curve is where you're seeing massive damage. When I say up the curve, so venture capital is a poorly used and defined term in the United States. And I would also encourage anyone Googling and teaching themselves, don't do that. And do not read books on this stuff. Talk to people who are in the fight, because it's changing, and it's a living, breathing system. Right? Same thing where your physician tells you not to diagnose yourself on WebMD. Don't do that in venture, please. When every time a founder comes to me and tries to tell me how a SaaS company is being valued, it's like off. Because that's what I do every day, right? So I'm just saying, when you're looking at those type of things, look up the curve. When I say up the curve, these are people, like, to your point, where let's say they've raised the A and the B, and they had to hit the press release. And Anduril, everybody heard of Anduril? Right? Raised $1.5 billion, $8.5 billion pre-money. Way overpriced. Okay. Seriously, it is way overpriced. But they have a real business, real revenue, thousands now of employees and stuff. Are they a public company? No. How do they monetize that? They go public, and they got to wait. That is where you're seeing like a 1 year. You guys would know better at Amerivet. I mean, like, was it like a 1 year? Last year is like one of the worst IPO years for tech companies.
It was, the whole equity market overall was down like 95%. It was pretty significant.
Well, from an inflated 21, but like over you smooth it, right? So what's happening is on the liquidity bit, this is for venture-backed software companies, guys. If you are something else, I'm not talking about that. But that has stopped the liquidity. So what happened was these low rates, 2018, 2019, we hit a temporary pause just for 1 quarter in 2020. And then it came back like wildfire in the back half of 20 and 21. Up the curve, people raising hundreds of millions of dollars. It was grow, 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 grow. Don't worry about profitability. Don't worry about your customers. So when you see startup layoffs and you see repricing, that is where there's absolute damage. I'm talking like 50, 75, 90% reduction in paper value. Well, if you're an employee of that company, you just saw your net worth go boom, boom. If you're an investor, boom, boom. Endowments, pension funds, everybody else who was like, man, I love venture. They're all like, what? Like, this is terrible, right? So that carnage is happening up above where we play, but it will come down. It will impact earlier stage. So if you're raising your first angel round, if you're raising your first whatever the labels are you want to use, $1 million, $2 million, $3 million, we all need those marks plus the public equity markets to establish a value. So it does impact us. I'm just saying we haven't seen too much, but there has been absolutely, a lot of venture is reckless to begin with, but there's been a lot of very reckless, in my opinion, behavior up above us, later stage, because they're rushing to the gates. If I just keep plowing money, like the mortgage market in 08, if it keeps going up and to the right and I can keep raising boatloads of capital, who cares? Like, look away, look away. And then it stops, and everybody goes, uh-oh. And then now you're seeing everybody sort of hold each other accountable, right, as you go back down the curve. So I hope that's helpful. I'm trying not to be too technical VC stuff, but when you read the headlines, that's kind of what's happening. You got a lot of people who are in really bad positions. And then founders. You on paper, I'm worth $100 million, and you're accounting like, okay, I'm going to go buy this house, or I'm worth $20 million, Well, that value until you exit just keeps coming back, right? Right. And then you're like, ugh. So hope that's helpful.
I mean, for a lot of founders that maybe are pre-seed or Series A, Bobby, you were talking about going into your Series A. How has your fundraising strategy changed with each round, and like, what are you doing to prepare for it now?
So our first round that we did with the friends and family, it was pre-revenue. We had no platform built, nothing. So when we went into that, it was just an idea. I went into a digital marketing agency, a website development firm, and I said, this is what I want to build. I want to build a verified crowdfunding platform for those who serve no fees, all that kind of good stuff. And they looked at me, they're like, this is going to cost $150,000. Do you have that money? And most of us, what do? We bootstrap, right? It's a big thing in the military. We bootstrap. That's actually one of the things on our fundraising platform is a Bootstrap Me campaign, which is basically Kickstarter, but we can't use the term Kickstarter. So we changed it to Bootstrap. It's the same thing, tier incentive kind of thing, but it's not to raise equities. It's just donation based. You could give back different tiers. We had a guy, Robert was speaking before about crayons. We had a guy that did crayons on our platform. It's pretty cool. He did crayons ready to eat. Frank Manto. He's out of California. Oh, you know? Okay.
He's a Marine.
Yeah. Yep, he's a Marine. So he did this. He did this fundraiser on our platform. He did great. He raised $15,000 to start his little business, and it was awesome. It really did well, and he was able to start shipping out his crayons all over. I ate them. They were pretty good. My kids used them. You know, it was nice. You know, I don't know the whole thing with crayons. You know, tell me afterwards. But now I lost my train of thought. Okay. Crayons. Back to crayons. So we did this friends and family round. We raised $550,000. After that, we did a Reg CF. So we went on a platform called Republic, if anyone's familiar with it. They reached out to us. They asked if we wanted to be present on their platform. And we had just started to slowly make revenue. It was a year in, and we weren't hitting our targets yet. We were able to place a small valuation on the company. And it was nice. We raised $130,000 on there from about 200 people. You know, small donations here, small investments here and there. It was regulated as a safe. So they'll get those investments back if we ever get acquired, hopefully. Cross our fingers. Let's hope. That's what we all want. We all want an exit, right? So, but now going to a Series A, we're looking to really build. Our revenues, a lot of our platform changed. We had fees originally. We took away fees. We're based now in tips. So that's how we make money on our platform. So if someone donates to a fundraiser on our platform, they have the opportunity to tip 10%, 15%, 20%, whatever you want. And believe it or not, we have 90% of people that donate, they give a tip. It's really interesting. So our revenue models, we're able to hit that and go to the Series A for the fall. And we're looking forward to it. We really want to branch out, and we want to take down GoFundMe or have them acquire us. That's our goal. So, and to really give you all something that you can rely on when needing to raise funds.
That's great. So we focus on different fundraising strategies and trying to mitigate risk as much as possible, especially in such like a volatile time right now in the marketplace. So I'd like to kind of close out the discussion with recommendations from each of you. How can these small businesses and startups better manage their cash flow and expenses, especially during a potential economic downturn?
Yeah, so I think there's a couple of things I'd like to leave you guys with. Time is really important, and so is your money. Make sure you're consistent, protective of your money, but then also realistic. Focus on your revenue and generating growth. Explore sources of non-dilutive capital through grants and loans from either federal agencies, government. Stay organized and have a business plan, have contingency plans. And then be obsessed with streamlining that plan as much as possible. And then communicate early and often to advisors, investors, and employees.
Yeah, either one.
Oh, yeah. I would also strongly encourage, I love the way Jackie just mentioned that, because I think all of us can glom onto that. Also be very careful people giving you specific feedback on your pitch deck and all this other stuff. I think at the end of the day, the only thing I'd add to what Jackie said is, I think it's been mentioned, you need to check yourself. If it's really challenging for your startup, I don't care about the macro market. There are a lot of people who started businesses, especially veterans, who shouldn't be. And the reason I mention veterans is because you don't want to go work for corporate America, right? And the barrier to starting a business has fallen. So you need to look upon yourself and your little cabinet of advisors, commanders, however you spouse. Check yourself, because if that purpose is in your belly, like our speaker mentioned, you will adapt. Most roles in the military put us all between ages 18 and 25 under some level of physical, mental duress and problem solving repeatedly. It's within you. Everything you need is within you. What you don't have is the money, right? But your ability to be resilient, like Jackie said, be relentless in refining your plan. Stay alive. That is your goal. Stay alive, and so opportunity can happen, right? Manage your mental energy. Again, I'm hitting that again. I can't tell you. So when somebody hits me, by the way, last comment, when somebody hits me like, oh, I've always wanted to be a founder, I'm like, why? It's terrible. Seriously, like the studies are starting to come out that it's a terrible burden on you mentally and physically. So what can you do? If you're not getting up every day as a veteran and doing physical fitness, wrong answer. I'm not kidding. I ask my founders all the time, like, are you doing PT? Because somebody mentioned the average age of a successful founder was, what, 40-something? Yeah, did you know the average age for a venture-backed startup in the United States, so from the day you start the LLC until you exit, is still 6.5 years. It's not one deployment. It's not, you know what I'm saying? You can use all the parallels, right? So I have Mike and I talked, so I've got a stubborn Navy SEAL in my portfolio. I was like, I'm just going to work through it. I can figure it out. I'm like, this thing will break you. It will, because of the duration. So everything that Jackie just said, I would totally support, but just keep working the problem, stay alive if you have the purpose. If you don't, there's no harm, no foul of saying, you know what, this is not the thing. Shut it down, but that bug's within you. You'll go do it again, I promise you. But that would be the only other thing I'd add in terms of resiliency.
I'm just going to add to build off of that too. I can only go off of experience, right? So your team is everything. Who you bring into this company that you're starting, that's everything. I learned the hard way. I started a company with 3 of my friends. It was horrible. They're off. They're gone. They're still shareholders in the company, but they're not part of the team anymore. You know, it didn't work out. And it takes time to realize who your team is and who you could work with. You know, that's one of the important things. Like he said, you know, find yourself. And then if your team aligns with you, the company is going to go berserk. It's going to go crazy. It's going to work. And don't waste money. Please, don't hire a marketing firm and waste $10,000 a month for them to do nothing for you, because that's the truth. Those marketing agencies out there, I've been through it. For the past 2.5 years, we've hired now 7 different agencies, and we're on to our 8th right now because they don't know what they're doing. And your best bet, to be honest, find somebody that could just do some digital content for you. Find somebody that knows ads. Find somebody that knows Google AdWords. Find your networks to share it with. I built my network on LinkedIn. I think I have 7,000 followers now. It's something stupid. It grows. Find those people. Connect with them. Ask them to share your stuff. Just ask. People do it if you ask. It doesn't hurt to ask. Just don't waste your money and know who your team is.
Yeah, so Bobby, Brandon, Jackie, really want to thank you guys for your time this afternoon, and we'll all be around if you have any other questions after this. Thanks so much.
Applause to our panelists here. Thank you guys so much. Another